Hey there, welcome back to the channel. If you are a small business owner or self-employed professional, aka the boss, the employee, and the HR department, today's video is for you. We're talking about one of the most powerful retirement tools available to entrepreneurs, the SEP IRA. Don't worry, it's more interesting than it sounds and way more helpful than ignoring retirement and hoping it just works out. Now, I know retirement planning isn't the most exciting topic when you're running a business. You're thinking about clients, revenue, operations, marketing. Retirement often gets pushed to the back burner, just like all of us. But here's the thing. Choosing the right retirement account can make a massive difference in how much you're able to save and how much control you have over those savings. So, in today's video, we're breaking down the three main benefits of SEP IRAs that make them stand out from traditional IRAs, Roth IRAs, and even 401ks. And I promise, by the end of this video, you'll understand exactly why so many business owners choose this option. So let's dive in. Let's see. Let's start with the first major benefit. Honestly, this is the one that gets most business owners excited, the significantly higher contribution limits. So let's put this in perspective. If you're contributing to a traditional IRA or a Roth IRA in 2026, your contribution limit is $7,500. If you're under 50, it's $7,500. If you're over 50, it's $8,600. Now, don't get me wrong, $7,500 is a solid retirement savings. But for many owners, especially those who have profitable years, this limit just doesn't cut it. Enter the SEP IRA. For 2026, SEP IRA employer contributions can go up to 25% of your compensation for a maximum ceiling of $72,000. Let me say that again, $72,000. That's nearly 10 times the traditional IRA limit. So think about what this means in practical terms. Let's say you're a self-employed consultant and you had a great year. You earned $200,000, and with a SEP IRA, you can contribute up to $50,000 to your retirement account because that's 25% of your compensation. Compare that to $7,500 you'd be limited to with a traditional or Roth IRA. We're talking about nearly 7 times more retirement savings potential. But here's where it gets even better. The SEP IRA gives you control over your contributions in a way that aligns perfectly with how business actually works. Business income isn't consistent, right? Some years you're crushing it, other years things are tighter. With a SEP IRA, you're not locked into contributing the same amount every year. In years when your business thrives and you have the cash flow, you can max out your contributions. But in leaner years, you can contribute less or skip contributions entirely without any penalty whatsoever. This flexibility in an employer plan is huge. It lets you adapt your retirement strategy to your actual business performance rather than forcing you into a rigid contribution schedule that might not make sense for where your business is at. If you're able to contribute even close to that $72,000 maximum for several years during your peak earning periods, you're building substantial retirement wealth and creating real security for your future. So that's benefit number one. Higher contribution limits that give you dramatically more capacity to build retirement savings, combined with the flexibility to adjust those contributions based on your business reality. So let's move to the second major benefit. And this one is going to save you time, money, and a whole lot of headaches. We're talking about simplified administration. If you've ever looked into setting up a 401k for your business, you know it can be complex. There are forms, filings, testing requirements, and often you need to hire third-party administrators just to keep everything compliant. SEP IRAs They're the complete opposite. Let me break down what you're not dealing with. There's no annual Form 5500 filing requirement. There's no discrimination testing. That complex analysis required for 401ks to make sure the plan doesn't disproportionately benefit highly compensated employees, that's the testing. And there are no costly plan administration fees eating into your retirement savings year after year. So, what do you actually have to do? You complete IRS Form 5305 SEP, and you'll work with an administrator to establish your account. That's essentially it. The setup is simple, and the ongoing maintenance is minimal. Think about this from the perspective of a small business owner. You're already wearing multiple hats. The last thing you need is a retirement plan that requires significant time and attention to maintain. With the SEP IRA, you can focus your energy where it belongs, on growing your business, serving your clients, and developing new products or services. Now, some people hear simplified and think they're giving something up. That's not the case. When you choose a self-directed SEP IRA, you maintain the ability to diversify your portfolio with alternative assets, real estate, precious metals, private placements, cryptocurrency, promissory notes, private stock, gosh, on and on. You get administrative simplicity combined with tremendous flexibility in your investment choices. So that was benefit number 2. Simplified administration that saves you time, saves you money, and lets you focus on what really matters while still building a robust retirement portfolio. Let's see, benefit number 3. Let's talk about this third major benefit, and it's one that is particularly valuable for anyone whose business income fluctuates, and that is flexible contribution timing. Here's the deal. With a 401k employee deferral, you must make contributions throughout the year. The money comes out of each paycheck before you really know how your year is going to shake out. SEP IRAs work differently. SEP IRA employer contributions for a given tax year, let's say 2026, are generally due by your tax filing deadline, including extensions. So we're potentially talking about having until October of 2027 to make your 2026 contribution if you file for an extension. Why does this matter so much? Because business is unpredictable. You might start the year thinking you're going to be moderate, and then you land 3 major clients in November, or maybe you expect a strong year, but market conditions change and things end up tighter. With the flexible SEP IRA contribution deadline, you're not making blind decisions. You can wait until you're preparing your taxes, see exactly how much profit you made, and then decide strategically how much to contribute. And here's where this benefit becomes even more powerful. Combine this with those higher contribution limits we discussed. Let's give you an example. Picture this. It's April 2027 and you're finalizing your 2026 taxes. You realize you had a stronger year than expected. We all like a good year. With a SEP IRA, you can make a substantial contribution right then and there, up to $72,000 for 2026. That reduces your business's taxable income for the previous year while simultaneously boosting your retirement savings. You're making a strategic decision with complete information. For self-employed individuals and small business owners, this alignment between contribution timing and business cash flow removes a major stress point. You're not scrambling during the year to find contribution money when you might actually need that capital for business operation. Instead, you can use your cash strategically throughout the year for business growth and then make informed decisions about retirement contributions when you have your complete financial picture. So that's benefit number 3, flexible contribution timing that lets you make informed decisions based on actual results rather than projections. Now that we've covered those 3 main benefits, higher contribution limits, simplified administration, and flexible timing, I want to talk about something that makes these benefits go to the next level, and that's the self-directed approach. When you combine the SEP IRA structure with self-directed investing, you unlock even more possibilities. A self-directed SEP IRA gives you control over your asset choices beyond just typical stocks and bonds. Think about where you have expertise. Maybe you understand real estate, precious metals, cryptocurrency, private companies, or promissory notes. With a self-directed SEP IRA, you can invest in those areas based on your actual knowledge and experience. You're not tied to the market. Now, I want to be clear about something important. At Mountain West IRA, we focus exclusively on education about self-directed IRAs. We do not provide financial advice or recommendations. We're not licensed to do that. What we do is help you understand your options so you can make informed decisions about your retirement savings. The combination of SEP IRA benefits with self-directed flexibility creates a truly powerful retirement savings vehicle for business owners who want both tax advantages and investment control. So let's wrap this up. If you're a small business owner or self-employed individual thinking about retirement options, the SEP IRA deserves serious consideration. Those higher contribution limits give you substantially more capacity to build retirement wealth. Simplified administration saves you time and money, and the flexible contribution timing aligns with actual realities of business cash flow. One quick note on timing. The deadline for establishing and funding traditional and Roth IRAs for the 2026 tax year is April 15th, 2027. However, SEP IRA contributions for 2026 can be made up until your tax filing deadline, including extensions if you filed for one. Your retirement savings deserve the same strategic attention you give to your business. Understanding your options is how you make that happen. Thanks for watching. If you found this helpful, hit that like button, subscribe for more content on retirement planning and self-directed investing, and drop a comment below if you have questions about SEP IRAs. I'll see you in the next video. Bye.